calls. What kind of a just a real quick because we don't want to drag this out too long. What kind of hard fast rules do you have on covered calls, Dallas? Because you know that they're essentially my nemesis. I finally feel like I have a healthier relationship with covered calls now because in the main portfolio I show that I buy leaps as well, which is something that I've been doing the whole time, except not really with the strategy and implementing like the wraparound with the poor man cover call as well. And for whatever reasons, it's really weird. I don't like having shares that are unencumbered, but I can buy leaps and I don't have to sell calls against those leaps. It's just so weird how that golf shot doesn't bother me. But the other one's like, oh my goodness, it's kind of like the Bulls and the Bears. The minute he gets assigned stock, like I feel like his heart's beating 200 beats a minute. He can't wait to sell that damn call and get that thing off the portfolio. I don't like the way it looks. I'm just messing with you, Matt. But
So that
what are your
that
hard fast rules, Dallas?
that guy says he's not kidding, by the way, in the chat. But he also says that Apple, Microsoft, Amazon, and Google are not his kind of stocks. So I'm thinking maybe he should change his stocks because I don't know. But man, if you bought Amazon at like $90, you're doing pretty well. That type of thing. But yeah, so calls, obviously, everything, all my rules for puts, calls are just flipped. So I wait for it to break through the 2 ATR, wait for it to go above 60 RSI, that type of thing. But more recently, it's become more like gut feeling type of thing. I even said like 2 days ago, I did a video and I'm like, I really have some uncovered Tesla shares and I just have that gut feeling like it's going to run up, up to the event next month. Uh, and so sometimes it's just a gut feeling like, I feel like this is kind of due for a run up. Let me hold off a little bit here. Or sell half cover calls. If you have 200 shares, sell one cover call.
Right.
If it continues to go up 10 more percent, then sell it, something like that.
Well, I sure wish I'd have listened to you on Tesla. This is what I had. I already had to roll the covered call. This shit got crazy. So I've got now 190 covered call on 40 contracts for 719, and I'm already underwater on those, but I do have quite a bit of time on my side. Picked up another 10,000, 13,000 on the initial contract, so I've gotten 23 grand for my trouble. But this looks like a scenario where I may be behind this stock for the next 6 months to a year, depending if it passes some critical levels and from a technical perspective, because it could easily pull down to like 165 or whatever if you really study the chart a little bit. And there's a guy named Wicked Stocks that has a really good technical channel, and he does a little 7 or 8 minute video on Tesla every day. I think he does one on Apple also, and it's been a pretty reliable source for me for probably 7 or 8 months now. So yeah, I definitely wish that I'd waited on that one, Dallas, because you told me a couple times, and I did not like having these shares unencumbered, and now it's a positive problem though, because obviously now I'm even on the shares or about even on the shares, and the leaps are printing money, but it's
I
like
still don't like to wait too long. Like 2 days ago, I had that video saying like, I just have kind of a gut feeling, and then yesterday it was up like another 2%. So I did sell calls yesterday, and of course they're down like 60% today, right? Because Tesla was up like 5%. But I've been putting my strikes way more out in the distance. So I did a 215 call.
oh, so you got breathing room, yeah.
And still, when you're working with stocks like Tesla, you don't have to be as greedy. You can still sell those like 0.15 to zero point 0.2 deltas and still collect almost 30% a year,
Right.
if that's your baseline. So, I felt at the time fine, even capping it at 215 because that's good bit above my cost basis, and I knew I'd be happy. But I just been burnt, man. Like with CrowdStrike, like I'm gonna be in that trade for years.
Right.
Um, just rolling up those calls every couple months or whatever. Um, so it's just like with Enphase scarred me selling puts. I just sold Enphase puts for the first time 2 days ago since last October, just because that had messed me up so bad, getting assigned at like 125 or 130, and then riding it all the way down to 70. And so now I'm more hesitant for calls because of CrowdStrike. Um, you can't let it mess you up too bad because those aren't normal circumstances, where you get hundreds of percent gain in 1 year. But
Right.
I think you should also take into account, like, is this stock really oversold? Like I'd be careful selling calls right now on SoFi. Stocks like that are way beaten down gets a little bit of good news, and then but now I'm more willing. I can't remember the what it's called. It's like a some theory um, of like that we are so against taking losses that it can mess us up so bad. But now, like, let's say I had a bunch of SoFi like $7 calls or 750. If we got some good news right now and that got quickly breached or whatever, I'd be fine just taking the loss on the call, honestly. Um, if I felt that we were at the bottom there, instead of like just avoiding the loss and then be rolling and rolling and rolling.
I hear you. Garcia, I know that you recently dealt with some covered call anxiety, and we talked a little bit about this last week already on our, the Wheelers episode. What are your hard fast rules on selling covered calls, or are you still kind of feeling out this process because it's new to you?
Oh, I think that was Alex that you guys were talking last week.
Uh,
But for me, I'm
no, but I follow you on X, and
oh,
you,
okay.
you do have some covered call anxiety going on with Palantir here and there.
Yeah, and for me personally, I don't feel the anxiety as much now, just because I kind of look at, I guess, instead of looking at moving averages, I guess I keep it simple for myself, where I just kind of create like a horizontal line on like recent highs. Like right now with Palantir, it's like 26, $27 is kind of like a pretty good, support slash, resistance level going back to like 2021. So it's that I'm selling covered calls at that level. So I'm not selling covered calls anywhere near the money on Palantir, just because I'm not looking to wheel that stock. I'm a long-term investor in Palantir, and I'm just collecting, I guess, manufacturing my own dividend on Palantir. So
Right.
I'm happy with the scraps that I get selling covered calls on those shares. And even if there is a 10% move, 15% move, I've already ran, simulations where, okay, it popped, 10%. How long do I need to roll it out to? I just need to roll it out like maybe a month or 2 months, and I can get up to a $35 strike on these covered calls,
Right.
because if you give yourself enough breathing room on the first covered call that you sell, you kind of set yourself up for success by rolling it in the future. Like, let's say if I had sold a $24 covered call, it would be harder to roll that up to 30 and $35. Whereas I gave myself a good amount of breathing room. The stock runs up to 27. I'm not worried. I'm not worried that, oh my gosh, it's going to go to 30 and 40, because if it does go up to 30 and 40, then I'll just roll it up to 30, 35, collect a good amount of, uh, credits. And if I get assigned, then I'll wipe my tears with the profits, and stay in the sidelines a bit, or maybe buy some TSLL, buy some Innovix. But for me personally, I just give myself a really good amount of breathing room. I'm just more worried about keeping the stock.
Bill White, how do you deal with covered calls? And here's another question, and then we'll circle back. And I want to get Bulls and the Bears on this one too, because I feel like we've probably dealt with it quite a bit. When do you just let it go and start over with the stock, or do you move the money somewhere else? Like, if the shit gets away from you. Let's say those are your Tesla covered calls. Like when do you just log the win because you've been in this market a long time, Bill, and you know that stocks don't just usually go up and stay there. Um, how do you deal with that? Do you rely on your experience? Do you study the technicals, or you just fundamentals? Like how do you navigate those waters?
Well, for me, I I don't own that many tickers, right? I
Right.
might own a lot of shares, but it's very limited amount of tickers. So I'm looking to keep those companies. If I start questioning whether or not I want to be out of a stock, then I'm going to treat that very differently than a stock that I want to stay in. So, kind of like Garcia was saying, I like to give myself a little bit of room. My bread and butter, really, on the premiums is on the put side.
Right.
I do pretty well on the call side, but it's really managing it very differently, and I'm not trying to maximize my premiums on the call side. So I'll give myself a bit of room, and every ticker has kind of its own personality. So like with Tesla, what I like to do is I'll set something 2 weeks out, and then after 1 week, I'll look to manage it from there. Sometimes it means I don't do anything. I just let it expire if it's not moving a lot. If it's going up, after 1 week, I'll kick it out 1 more week and bring it up a little bit, collect a little bit more premium, and I'll just do that over and over and over again. But it allows me to stay ahead of the stock for the most part, right? So I'm not having to push it way out. I'm just managing it weekly, but making sure I'm only 2 to 3 weeks out maximum. Um, so really, with the each ticker kind of has its own personality, but I'm not looking to maximize premiums on the covered call side. But I'm like you, I need to always have them on. I like having them on, but I'm not looking to maximize. So if you give yourself some room, you can kind of just, a little bit here, a little bit there. But when the stock stops moving or starts to come down, that's when you see the flip. Because really what we're talking about here is when you own shares that you don't want to get rid of and it keeps going up.
Right.
That's where it becomes a problem. But if it's not moving, you can make a lot of money on covered calls over and over again.
Correct. Like I get a lot of flack with the position size on SoFi because it's at down quarter million on the shares, but for about a 35-40 day trade, picked up 49,500 on that batch a couple days ago.
Yeah.
And I'm like, and that ain't the first time. You know what I'm saying? So I'm just like, I kind of like my rental here low key. I mean, I would like it to go maybe to 7 because the premiums would be just a little bit juicier, but I really don't want SoFi to go up too much right now because the cover call premiums are still substantial because I'm willing to sell at pretty aggressive levels. But then I'm also able to play the other side of the coin, which even though I don't like selling cash secured puts, it's a lot more profitable for me historically. Like I'm better at it than I am at covered calls because I usually get caught with my hand in the cookie jar a lot more on covered calls statistically than I do with cash secured puts. How do you deal with that, Matt? How do you deal with the Bulls and the Bears with covered calls gone wild, if you will? Do you just let it happen? Like, you're not really a big fan of rolling? Like, where are you at with that? Because I feel like that wasn't real clear to me on the last episode of Wheelers.
So, my rule for selling calls is it needs to be at or above my original cost basis where I bought the shares, not my adjusted cost basis.
Like your
It
average
needs to
cost.
be
Your
at the
average.
original or higher, and I need to get that 30% or greater return as well. Um, so if I can check those boxes, I'll sell the call, and I'm happy with the outcome. If it gets assigned, even if the shares are at break even, it's still a successful trade because I guaranteed that it's still a 30% return because that was the rule going into selling the premium. I do roll because I try to give the stock, I'm trying to get better at this. I'm trying to give the stocks the chance to really run. So I try to sell as far out of the money as I can while also getting that 30% return. And then if I have the opportunity to roll out and up for another 30% annualized credit, then I'll do it. And that's so much easier when with the leaps because the premium, it's easier to get a 30% return on premiums for a $250 stock when your investment is only 4,000.
Right.
So like with McDonald's, for example, it's super easy to roll out and up for a credit and get that 30% return. So I've been doing that a lot, trying to just give myself the room for it to run because I haven't been good at that in the past. I'm so aggressive. I just want it, sell the calls and get out. But there's been so many times where I'm like, wow, look at the move it made after I got out of it. Like, so
All right.
I'm really trying to let it work because that's really where your biggest returns are going to come is from the capital appreciation of the shares or the leaps. But those are my rules: 30% annualized and at or above my cost basis, and I'll roll it if I can get a net credit that's equal to 30% annualized. Otherwise, I either don't sell calls at all, and I just wait for the stock to come up because anything less than 30% annualized isn't worth it to me. I'd rather take the chance that it has an overnight catalyst and shoots up 15% with, and have it uncovered. Or I just sit on my hands. Or actually, no, that is sitting on my hands. Otherwise, I just take assignment and I'm happy either way. So that's just because I like the turnover. So I'm not married to any of these stocks, as
Sure.
I say, but I make sure they're wife material.
I have a question.
That's the quote.
And Matt, I have a quick question for you.
Sure.
So let's just, hypothetically, you're in McDonald's and you sell a covered call, and it breaches the strike price, right?
Yeah.
Would you not roll for up, even up and out just a little bit, even if you don't get a 30% return?
Correct. Yeah, because where it'll be a profitable trade because that's I make sure to set myself up that way when I sell the call, that if I do have to end the trade on that covered call, it's a profitable trade, and I'm happy with that. So yeah, if I can't get that 30% annualized, I'm not going to roll. I'd rather just take the profit, find a new opportunity.